Welcome to the Real Estate of Things podcast. I'm your host, Dalton Elliott. Jeff Tennyson, my guest this week. Thank you so much for joining.
Dalton, thanks. It's great to be with you live in the Real Estate of Things studios. Before we get too far into this, first of all, I just want to say thanks for doing such a terrific job leading this podcast. I think you launched it in September, and I have been so impressed with not only the guest you've selected to kind of talk about the real estate of things, but the content and message and learning and education that's been done by this.
Yeah, thank you for that, Jeff. And you really hit the nail on the head. It's all about the guests. And I see myself as someone who just tries to bring out insights, just tap into the brains of these amazing people. It can't do it without every guest every week. One's like Tiencia James, just an incredible human being. And an episode I really enjoyed recording. It was our first time sitting down talking. She's an emergency medicine physician. She's a triathlete, and she's a real estate investor. I don't know where all that time in the day comes from, but she manages to perform in all these buckets at an incredibly high level. And one thing that resonated with me from that episode was her thoughts on dollars versus doors. She's gotten into the multifamily investing, and in the multifamily space, so many people talk about, I want to get to X number of doors, 500 doors, 1,000 doors. Her focus is really on dollars. She has an income target, and that's all she focuses on. Doesn't matter how many doors it takes to get there. It's like, how can I most efficiently get to this monthly income level? So that was a great episode.
Yeah, I mean, the ones that obviously the ones that stood out to me throughout the year, of course, people like my good friends Gary Beasley, John Hornick, Leonard Rosen. I just think I'm very respectful of those guys. Really believe that the work that Leonard's done with the National Private Lenders Association is something that's not only been really helpful to private lenders across America already, but is continuing to add value from the work John Hornick does on the legislative side to the work others are doing. I know you're involved actually on the ethics committee and trying to really create an environment for the private lender industry that we're no longer hard money lenders or no longer not respected in the mortgage platform. We're truly making a difference. People like, Chris Napi, who is, the opportunity zones that he's working. I mean, so many of these people, John Curry at Setanta came to mind, the work they're doing in acquisition and development that will help create environments. And it makes me think a lot about really what we're doing at Lima One Capital. Our mission statement is to improve neighborhoods across America so that families can live the American dream. And that's really what private lending is all about, is we're improving neighborhoods. Every single loan, every single project, every single opportunity that we have to do what we do as private lenders is improving neighborhoods. And those neighborhoods, as they get improved, are shared with families who, particularly, we just, finished one of my favorite holidays is in November is Thanksgiving. And, when I sent the Thanksgiving message out to our employees a few weeks ago, I highlighted the fact that we should be proud as a company that the loans we make and the things we do are helping families sit down at tables that we help create those neighborhoods that create that family dream. And I think you've done a really good job with the real estate of things of highlighting the variety of things that are going on across the private lending industry. And, I hope we continue to find good ways to do that.
Yeah. You went down just a handful of the incredible guests and really excited about 2022, right? You mentioned that we started this podcast in September, so it's only a few months old. And we are already knee deep in figuring out who's going to be on the podcast next year. So incredibly excited to continue to grow on the podcast side.
Yeah. Any hints you can, any teasers or hints you can give us for people to watch for? You've got my interest.
Oh, well, I'll give you a couple that we have in the hopper we're chatting with. A lot of athletes are on the docket for next year, right? So you think about, especially on the NFL side of the fence, we have started chatting with a couple of folks who used to be in the NFL. They got out and still relatively young, and a lot of them, did well in the NFL. I think the league minimum is a couple $100,000, even if you're on the practice squad. So you're making good money no matter where you are. And looking to the future, I may be in my late 20s, early 30s, got out, have some cash. What do I do now for the next few decades? And real estate investing is an incredibly attractive opportunity because they have that flexibility and they have some dry powder sitting around. So to be able to build up some good residual income. So that's a teaser of a bucket that we haven't had anyone on that side of the fence to date. But in 2022, we're going to have a bunch of athletes cruising through.
Yeah, that's awesome. Well,
Yeah.
I just, again, congratulations on a terrific podcast series, and you've done a terrific job through 2021. And I know with the work that you and your team are doing, we're just getting started. I mean, I was looking, you and I were chatting about viewership yesterday, if I think, and I mean, what many podcasts take 6 to 9 months to do, you've been able to pull together in less than 3. So I think that's just the thing, that what's to come. And I encourage our listeners to keep listening to it. Our job, your job, is to keep providing good content that is meaningful and entertaining and thoughtful. And the more we can be through the real estate of things, that Lima One helps sponsor a thought leader for our industry and help our industry grow and develop. That's what we want to do.
I love it. So let's dig into you a little bit. You're the guest. I get to pick you apart this week. So you let the cat out of the bag. You're the chief executive officer of Lima One Capital, really the nation's premier lender for real estate investors. Lima One Capital lends nationwide, right, across a wide product set, everything from rehabs and rentals to new construction and multifamily projects. And Lima One Capital is not your first rodeo. Right, you have quite a mortgage industry pedigree. You have, at least to me, a literal lifetime worth of experience in the space. So walk me through the history of Jeff Tennyson.
Well, since you've told me we've got to keep this to close to 30 minutes, I'm not going to take too much time on that. But, I'm originally I grew up in Northwest Arkansas, so I'm a Razorback fan, and, real excited actually about the Razorbacks football. We're finally actually playing a pretty decent football season, so that's kind of fun to watch. But and went to a small college in Arkansas, got an accounting degree, spent some time in public accounting, got an MBA at Harvard Business School, and spent some time in investment banking. And then, I really I got the entrepreneurial bug and got a chance to do a subprime mortgage startup in 1997. And, we grew it from roughly 50 employees to over 1,400. 6.8 million was the production the first month I got there to the company. And we grew that to almost 2 billion a month. It's interesting, we're working on 2021 budgets or 2022 budgets for Lima One, and, stuff that takes us a year to originate today, we were doing in a month. Back in the go-go subprime days. So that was really, it was an incredible ride and an incredible learning experience to grow a culture and grow a company from 50 people to 1,400 people, be one of the top 5 subprime lenders in America. It was incredibly horrifying and depressing almost to see that fall apart through really some misguidance by an entire industry that did not respect or support some of the things that were ultimately put in place. And we'll talk about some of that later. But I learned a lot through that. I spent time in various startups and bank-sponsored mortgage platforms after that. And then Blackstone was in the middle of creating Invitation Homes. And they recognized the primary reason these real estate investors were needing to sell their rental properties to Invitation Homes was there was no liquidity in the market. And Blackstone, being smart people like John Gray and others at Blackstone, were so thoughtful and visionary in what to do. They've thought, wow, we need to help create a lender who would provide this liquidity to these people as they buy their property, so they have more liquidity to spread around, and asked me to start a company called B2R Finance. At that time, really the only competitor was a company called First Key, which no longer exists. And so then shortly thereafter, Beth O'Brien at Colony came in, and Colony Finance was created. So, we just came back from the single family rental IMN in Scottsdale. And, in that early 2013 periods, there was only 3 of us on the panel about what was going on in single family rental. And that was the business purpose lending space. And today, to see that, today B2R is now FOA, Finance of America Commercial. Colony is now Corvest. And then there's been a whole group of people who have been created from that. And as a result, I think what's exciting is we now truly have an industry that's developed from that. And actually, Goodmunder Christensen and I think chatted about that a couple of weeks ago on this podcast, where it's now it's not just a trade any longer, it's an industry. And so I'm real excited that my mortgage background was able to help me make a meaningful impact into a brand new industry that really didn't exist other than at the local hard money level. And so I was kind of finishing up a project for Clayton Holdings when John Warren, the founder of Lima One, reached out to me to be effectively the interim CEO while he ran for governor of South Carolina. It sounded like an interesting reason to kind of come off the sidelines and come off the beach and help do something for a friend. And so that's what got me to Lima One Capital. At the time, we had 60 employees. We were doing about $20 million a month, primarily in fix and flip. And I saw an amazing culture, a great opportunity to build something truly unique in the business purpose lending space. And today, Lima One's lending in 46 states. Will originate, almost $1.5 billion in loans in 2021. I was doing something today for someone, that represents almost 5,000 loans that we've made into neighborhoods across America, so that those neighborhoods can truly be improved, be different, and that families can truly live the American dream. So I'm really proud of what we've created at Lima One. I'm energized every morning, recognizing the purpose and values that we create for our industry. And I hope that all of my private lender colleagues will recognize that and celebrate the same thing.
Yeah, I can't imagine the viewpoint you have of kind of watching the mortgage industry and these couple of niche industries within over, really the span of decades. I got into this space. My day job is at Lima One Capital, and I got into this space in June 2015, right? Mm-hmm. And we were doing a couple million a month here when I got here. Just incredible growth between then and now. So, trying to stretch my mind back to kind of late 90s, early 2000s. It's just been a wild ride for my short period, and hearing everything over the years from your perspective, just all the more crazy. And a beautiful thing is that, we're not finished, right? I know a big part, you mentioned the 2021 production. A big part is 2022 production, and that number is bigger than 2021, right? And just keeps on going up and up.
Yeah. It's interesting. We just came off our executive leaders offsite to really plan for 2022. And, we're beginning to look at 2023, 2024. We've even got really long-term vision. What does 2034 look like? And while, that's not really clear, that's a really blurry, what is it going to take to have the infrastructure and opportunities that creates? And we think, I think that the message that delivers not only to our people for stability and growth, but to our industry, because we do think there's a lot of opportunities ahead in our industry that private lenders business purpose lending, whatever we want to call it, have a really key role to play and a great opportunity.
So on that a little bit, I was born into the building boom of the 90s, and then that moved into the early 2000s. Then you had the Great Recession hit, housing crashed. Now we've been on really a decade-long tear. Even with COVID being thrown into the mix, American housing has remained incredibly strong. It's a pretty wild ride over the last few decades. But how would you describe the optimal, healthy American housing market? Like, think as if you were explaining it to a cast of kindergarten students. I know we're such a jargon laden industry. Is there such a thing as kind of a realistically achievable optimal housing market, or is it just always kind of a roller coaster?
Well, I think that's if you look at the historical statistics, you could not conclude anything other than there's going to be a consistent volatility in the housing, particularly the mortgage market. And primarily that's so much rate driven. And I think, part of the stuff that we're seeing today is a direct result of the Fed's involvement and all the things that they have put money into the system. They've kept interest rates low. And as a result, people have been able to take advantage of that through housing. I think the other thing to keep in mind of the pandemic and the recession, and the reason we went through a quick recession and are coming out really quickly, is it wasn't a housing issue. It was truly a social issue from the pandemic. And in many ways, I talked earlier about the subprime industry and what we learned from that. While those of us in the mortgage industry were very concerned that we would be overregulated with many of the things that came out as a result of that, I would argue many of those things that they did put in place, tighter RESPA rules, tighter tiller rules, ability to repay, all the different things that they better disclosures, all the things that help make that market more credible and transparent, helped avoid the situations we saw in the subprime collapse that did hurt, because we see when customers overspend on housing and over leverage on housing, it will eventually cycle out, and you really have to cycle through the downtime just like you do had the things in the uptime. I mean, where we are today, I don't know if you can ever have a perfectly healthy housing market, but I do think we have a healthy housing market today. And that's driven by a couple things. Of course, there's certain pockets that's got home price appreciation a bit out of control. California comes to mind, certain areas of Florida, primarily the leisure areas, beach homes, second homes, those kind of things seem to be way out of line. Those will regulate themselves through supply and demand. I think the pandemic has moved people out of some of those high rent districts, for lack of a better description, into more reasonable areas for housing prices, and that's caused those to increase in meaningful ways as well. But inventory continues to be a challenge for us at Lima One. One of the biggest barriers to our people having more successful projects is finding inventory to rehab, to rent, to do all the things that go in that. So until an inventory is still a kind of a 4-month and we, historically, a healthy housing market would say housing inventory is closer to a 6-7 month range. And so we still have some work to do there. But, I think we've got a healthy economy. We've got good opportunities. Interestingly, I just read a stat from Redfin yesterday that said, 18% of all the home purchases in quarter three were from real estate investors. So I think the real estate investor market helps to continue balance, which is not just people wanting to occupy the homes living in it, but real estate investors, because of the work the private lenders have done to allow that liquidity, are another buyer of those homes to keep things more stable and more active.
Yeah, I was cruising through Redfin too and saw an article about something you mentioned, really home price appreciation pushing people to more affordable cities. Just because home prices have been on a nationwide tear for the last 18 months, call it. So it's a relatively long feature, and it's nationwide. So you have home price appreciation pushing, And then they also talked a little bit about kind of major adverse weather events. Every hurricane season seems to be a new record hurricane season, which I grew up on the coast of South Carolina, and very familiar with the workings of hurricanes coming and going. And I don't think I would live on the coast again. Being 28 years old, I don't know if I'm terribly bullish personally on having a primary residence that's pretty close to the water. So what impact do you think that has on it? And do you think that this push to more affordable cities is this kind of a permanent fixture where you're just going to have a real population shift out of your coastal areas?
And I think it's way too early to raise the victory flag outside of the primary industry markets. The New Yorks, the Dallas, the Miami, the San Franciscos, the LAs, Chicago's. I mean, those primary cities in America that I think they're going to continue to have strong activities. However, I think what will change is I think we are demonstrating, and I was reading an article from McKinsey today about what CEOs are talking about with people coming back to the office, and and the remote work and the impact of that. And I think more and more CEOs that I talk to and interact with are saying, we're going to need to get our people back into the office in some way, and flexibility. So now all of a sudden, unless you see these corporate offices relocating their headquarters to some of these cities, people eventually are going to have to get back into and be able to get to these places on a routine basis. And so perhaps for people like us, that means, short-term rentals, short-term rental business, and other kind of things are going to be really opportunistic, because people are going to need to be there for 2 or 3 days a week, two or 3 days a month, and that's going to create some in those markets. At Lima One, we've always focused on what we call the second and third tier markets. We think those are just great, basic, great places to live, great quality of life, balanced values. So you typically don't have huge spikes and huge declines like you have in some of these Florida, California, Northeastern markets. And so we think that will be, because now there is going to be a group of people that can work remote forever. And I think they're going to choose to have quality of life, and living the lifestyle is going to be more important than living in a major city, particularly as the millennials have families and grow and want to spend more time with their families. They're going to want to live a little more differently than an hour and a half commute from Manhattan out to New Jersey.
Yeah, that makes sense. One more question tied onto this. During COVID, with housing being on fire, my wife and I heard a lot of friends and coworkers who were ready to go on the house hunt and got into the crazy bidding wars, right? I went to go see this house on a Sunday. It was the first day of showing. There were 50 other people there, and 10 offers got put in within the first half hour, and offers going above ask. My guess is that so many people settled on their home purchase. Like, this is not my dream home, but it's the closest thing that was available that I could buy. Do you think that there's going to be kind of an influx of homes hitting the market 2022, 2023, of people who just got into homes and are like, I'm ready to get out of this house because I don't love it, I like it, and it was just a place that was available?
I think inventory is going to play a big role in that. I think two things are going to play a role. One is inventory. And then many of these folks found houses in areas they wanted to live in. It was close to work, it was close to family. And so I think those emotional and social ties are going to prevent them from just saying, oh, well, we're going to go to our dream house, but it's, 20, 30 minutes away. We picked this for a reason. We'll probably adjust to it. So I think it'll have some impact, but the key is inventory. And then the key is, what is my work going to require me to do? Because I think the other thing we saw through this is people bought larger homes than they would have bought 2 years ago, because they need an office for one or both of them to work in, because they're working from home and they need space to do that. And so I think, we may see an increase. It'd be interesting. Maybe that's a good real estate of things podcast option, is to get a national builder in to see what's the trends on what you guys see going out with home sizes and what's going on, because I think that perhaps we're going to be seeing people looking for, we kind of had a smaller downsizing after the housing crisis. We may end up having people getting bigger homes because they need more space. So
that makes sense. I think about the home I live in. We bought it 5 years ago, and it's geared for our anticipated life, right? But if my wife and I both started to work at home and with a 95-pound dog, then that changes the dynamic a little bit. So it seems like the remote work play is going to continue to kind of affect housing much beyond where we are today. So can I ask you a couple of fun, quirky questions? Get to know Jeff a little bit more.
Sure, have at it.
All right, sports. Let's start with that. We kind of football season going on. Shout out to the Dallas Cowboys. Hope and a prayer as always. What did you play any sports in school, Jeff?
Very poorly. But I grew up in this small, I had 43 people in my graduating class in this public high school. So we couldn't even have enough. It didn't have enough students to field a football team. So the only sports we had were baseball and basketball. I tried to play both. I spent way too much time on the bench, even in that small environment doing so. So I actually ended up realizing, I'm just not any good at these basic sports skills, and I'd be better off leading the team. And so I became the manager, the equipment manager of the basketball team my freshman year of high school. And by my senior year, I was the assistant coach because, I knew all the players and was able to so it was funny. I look back on that, and some of the leadership and things I'm doing today were there as well, because it's just leadership's just always been a real passion of mine. And to look back and see that I even did it in high school is kind of fun to think about.
There you go. So that's kind of your professional sport, leadership from high school through to today. So it's worked out well. If you could get paid, I don't know, if the real estate of things was like, Jeff, we're going to sponsor you, we'll pay you $20 million a year, and you can play any professional sport, what would it be? Would it be golf? That's my guess for you?
Yeah, no, it would definitely be golf. I love being outside. I love the beauty of a golf course, and it would absolutely be golf. Me and I'd hang out with Rory and Tiger and all those guys, and they, I'd teach them leadership.
There you go. I like it. That makes sense. Formula One is mine. Get paid to drive car 200 miles an hour. All your events are in just wonderful world-class cities all over the place. Monaco, Austin, Texas, Mexico City. That seems like a fun one.
Well, that's I'll plug our headquarters city in Greenville, South Carolina, the BMW Driving Performance Center. Anybody listening to the real estate of things, I encourage you to take a look at the BMW driving experience at Spartanburg, South Carolina. We won't pay for the driving experience at Lima One, but we'll host you in our office and let you meet Dalton Elliott, and maybe he can give you a quick shout out on the real estate of things.
I love it. That is a fun experience. Tabby, my then girlfriend, now wife, got that for me freshman year at college. Had no clue. Went and did the factory tour, and then driving on the track it was like an hour and a half after. And just an incredible facility that we have up here in Greenville. They make all of the X3s and X5s, I think, in the world. All of them are made in Greenville, right?
All of the X series. So all the
Yeah.
SUV X series, 3 through 7, I think they have now, all are made in the Greenville plant. It's fascinating, and plant tours are worth a visit.
Yeah, for sure. I have one more question and we'll let you off the hook. All right. You get exiled like Napoleon, right? They're like, get out of here. You can't live in the U.S. anymore. We take your passport away, but we'll give you another passport anywhere you want. What country other than the U.S., if you had to pick, where would you live? Where would you set up shop?
If you were to ask me this, 2 months ago, it would easily be Santorini, Greece. It is just the most beautiful, peaceful. To look at the Aegean Sea and all the things that you see there. I mean, the pictures you see of the white buildings and the blue is exactly what it's like. It's just such a. However, I just came back from Rwanda, uh, and it was such a beautiful country. I might actually move to Rwanda and find a way to own a coffee plantation there and build do Rwandan coffee and ship it to the U.S.
I would buy that coffee in a heartbeat. Only you got to put your face on the packaging. I like it. And I got a picture from you while you were over there of you standing, looked like 6 feet away from a gorilla that was probably 12 times your size. Uh, I don't know. He was looking at you a little hungrily. You'll need to watch your back if you set up shop over there.
Yeah, it was. My wife and I just came back from a trip there a couple months ago now, and trekking gorillas in Rwanda is an experience of a lifetime. So I would, the one free advice item today on the real estate of things. Good thing you got to listen to the whole thing to get this last little nugget. Right? Is take a trip to Rwanda. It's an amazingly beautiful country, and spending an hour observing gorillas in the wild is one of the most exciting outside adventures we've ever done. So
I love it. Beautiful note to end on. Jeff Tennyson of Lima One Capital. Thank you so much for carving out some time to chat with me.
Dalton, thank you. Thanks for giving us a really great blessing with the real estate of things this year. And, happy holidays to you and Tabby and your family, and, happy holidays and Merry Christmas to all of our listeners across the world. I'm so excited about 2022 and what's going on. We got some really messy things going on externally in our country in the United States, but I really do believe the best is so much yet to come with the opportunities in the private lending space, and I can assure you and everybody listening that Lima One Capital will be a big part of that. So thanks for allowing that. Thanks for allowing me the time on the show, and we'll look forward to listening to great things coming in 2022.
I love it. Thank you. And to everyone listening, thank you. Thank you so much for joining me on this journey. We're winding down for the year and look forward to hitting the ground running in 2022 with a jam-packed list of guests. So thanks again for listening, and hope you enjoy ringing in the new year. Take care.